What's up everyone, my name is Olive. Welcome back to my world of stocks and welcome back to my new series on the channel called Stocks My Viewers Want Me to Look At, where I basically take a stock from the comment section that you guys want me to do a review video on, and I do exactly that. I share my opinion, my quick thoughts on it, and I basically tell you if I think that it's a buy at today's prices. Now this is our second episode so far, and for this one we've got a super interesting stock here. This recommendation here comes from Toes in Air, who asks, can you please talk about Tattooed Chef? It was one of Jeremy's favorites, but it crashed, and I would love to hear your take on it. Thanks, love your videos. Okay, so thank you for that comment. Now, this is actually a stock that I don't really know too much about. I have heard a little bit about them just kind of by passing, but the commentator here actually mentions that Jeremy owns it. And of course, Jeremy is from the Financial Education channel. He's a very popular stock market YouTuber. And I actually met Jeremy myself in the past. I do think that he's a very nice person. I consider him a friend. I haven't seen him in a pretty long time, but he was very nice to me. I do have a lot of respect for him, and I think he's a genuine person. However, I make it a personal habit of mine to not watch the videos of other stock market YouTubers, so I was not really aware that he was making videos on this stock. And the reason why I don't watch those videos is because I just don't like to compare myself to other stock market YouTubers. I sometimes, to be completely honest with you guys, I get a little bit of anxiety watching their videos because I feel like I'm not as good as them, or I can't make my videos as fast as they can. So seeing them upload a lot just kind of gives me anxiety because I feel like I'm not at their level. And so I try to just kind of avoid it altogether. And another reason why too is because I don't want my videos or my opinions on stocks be influenced by other stock market YouTubers. I'd rather just have my own thoughts and my own type of videos and be doing my own thing. So I just kind of avoid all those YouTube channels altogether, and I never watch their videos. Now, having said that, I did a little bit of research obviously for this video and I looked into it. And so it turns out that this is a stock that Jeremy was buying fairly heavily, and he did make a few videos on it. And unfortunately, this is a stock that crashed by a giant amount. I mean, the stock really got destroyed. It's lost like almost its entire value, but it's still kind of hanging in there, but it crashed by a huge amount. And I also just want to quickly mention that I was looking through the comment section. I know a lot of people were kind of blaming Jeremy for it because he was very bullish on the stock, and unfortunately the stock crashed. I do just want to quickly say, and of course we're all entitled to our own opinions and our own feelings. I don't want to get involved in any of the drama, but I do just want to say that, look, sometimes we get these things wrong, guys, and hopefully you can be understanding of that, that we're out here just kind of sharing our opinion on a stock. It can go up or it can go down. And honestly, this past year, practically every stock in the market has crashed. So this does tend to happen from time to time with us. And look, at the end of the day, we do just have to do our own due diligence. We have to do our own research and make our own investing decisions. So I would just ask that you please not blame Jeremy too much on things like this. We're all kind of in this together, and I think it's better for the community if we're nice to each other and supportive rather than blaming each other for things that go wrong, because it's just the name of the game in stocks. Sometimes they go up, sometimes they go down. Sometimes we talk about a stock and it skyrockets, and I know Jeremy has talked about many stocks that have skyrocketed, but sometimes they crash, and it's happened to me and it's happened to Jeremy and it happens to everyone. So it's just unfortunate, but let's try to be supportive of each other and let's try to encourage each other, because I think it'll be better for the overall community. So I just wanted to quickly say that. But anyway, with that said, the question now, given that the stock has crashed by such a giant amount here, is it worth picking up here on the drop? So I did some research on the stock. I'm going to share with you my thoughts on the business, why the stock crashed, and where I think this is going in the future. And I hope you guys enjoy this, but let's just go ahead and dive straight into this. Okay, now just a quick little background on this company in case you've never heard of them. They were originally founded in 2009 as a maker of food products for other companies that had their own labels and brands. However, in 2017, the CEO's daughter, Sarah, joined the team, who happens to be a chef with tattoos, and started selling plant-based frozen foods under their own new brand name called, of course, Tattooed Chef, which they eventually changed the company's name to as well, as it became their primary business. Now, they do, however, still have their private label business, but the Tattooed Chef brand is really a lot larger and it is their primary focus. Now, they're also based in Los Angeles, California, with a few more production facilities across the country. However, their largest facility is actually overseas in Italy, which is where they grow the majority of their ingredients. And so they market themselves as a healthier kind of plant-based option in the frozen foods market with, European ingredients that are imported into America, which has really helped them take advantage of the rising popularity of not just healthier, more natural ingredients, but also the red hot plant-based meat alternatives market that had now grown by over 40% in the past 2 years, which is more than 9 times faster than the overall growth of total foods in general. And when you include fruits and veggies, single serve entrees, pizza, apps, breakfast bowls, and snacks within the broader frozen food market in the US, Tattooed Chef believes that their total addressable market rises all the way up to over $42 billion since they offer products for each of those subcategories. For context, Tattooed Chef only did about $200 million in sales last year. That means that their total addressable market is more than 200 times larger. So even if it's just a fraction of that, it still means that there should be plenty of room for growth over time if they're able to convince customers to give their plant-based alternatives a try, which up until this past year, it had been really working pretty well for them as they were able to grow the company by a staggering amount. In fact, they only had about 12 branded SKUs or products in 2019, but were able to grow that number up to 38 across 4 nationwide retailers by 2020. And then in 2021, they used their growing financials and the influx of cash from going public on the stock market to acquire 3 more manufacturing facilities and increase their SKU count up to almost 80 across 160 different retailers. And this year, it's already grown to 140 SKUs, so about double the size from the previous year, and they even started pushing outside of just frozen options with new refrigerated bars and other various offerings that we'll release over the coming years. And when you put some of these numbers into context, the growth was very impressive. Just last year, they increased their total store count by over 10,000 while raising their manufacturing capacity by over 300% as well year over year. The result is that their branded product revenue had skyrocketed by about 170% on average over the past 3 years. However, the issue is that their growth has shockingly come to a screeching halt seemingly out of nowhere. To give you a better idea of how the entire company as a whole is slowing down, well, their net revenue growth has now fallen from over 80% growth in 2019 down to 75% growth in 2020, and then it plummeted down to 40% in 2021, which is still pretty high. But then this year, guys, this is where it gets really bad. They're only expected to grow now this year by 13%, which is followed up by only 5% growth expected next year as well. So going from over 80% growth all the way down to just 5%. That's a huge crash. And to make matters worse, it's even resulted in them going from net profitability the previous 2 years to now an even bigger loss last year than what they did in profits the year before. So that's pretty crazy. Now, they went from being profitable now to a company that is losing a lot of money. And as you would expect, especially in this down market, all of that poor performance has caused what was once a high-flying growth stock that reached $28 a share in 2020 to get absolutely destroyed, crashing by a mind-blowing 95% from the top, just completely obliterated as a stock. And so the question now is, how did all of this happen? How did this go from a high-flying plant-based newcomer to now a low-growth, unprofitable spec stock that is struggling to move forward? Well, I think it's pretty clear that this has almost everything to do with lower demand, changing consumer trends, and the sky-high inflation and really poor macroeconomy in general that is really starting to hurt their sales going forward. And you don't have to take my word for it. Tattooed Chef has literally been saying this all year long. In fact, In their last reported quarter, management pointed to inflationary costs on their supply chain coupled with weaker demand for their products as reason for their net loss coming in nearly 5 times higher than the previous year. That's crazy. Practically everything for them was negative in the quarter. Their gross margin, their net income, and their revenue growth were all negative. Operating cash flow also came in at negative $17 million, which is more than double the negative $8 million the year before. And that's a huge deal, guys, because they only have 14 million in cash on their balance sheet as it is. So they're burning more cash now than they even have in reserves. And if that trend continues, well, then, what companies always end up doing is that they end up selling their own stock, which, of course, in the case of Tattooed Chef, their stock is already down 95% right now. So they'd essentially be diluting shareholders and only getting back the lowest prices on the stock that they've ever really seen. So it's a horrible deal. But again, they may not have much of a choice here if things don't improve. And while they are trying to turn things around by cutting costs, even that comes with a lot of drawbacks. For example, they're cutting 15 million from advertising, but that's going to hurt their revenue growth even more because it'll mean less brand awareness. They're also planning to raise the price on their products for the first time ever next quarter, but that too could hurt their already deteriorating demand. In fact, one of the biggest reasons why consumers are not buying these plant-based alternatives as much as they used to is because these products tend to be more expensive. And in such a weak macroeconomy with record high inflation and growing interest rates, consumers are just not willing to spend more money on groceries if they don't necessarily have to. For example, Tattooed Chef has recently been expanding into more Walmart stores, but if you guys actually read Walmart's latest earnings report, you know that Walmart specifically pointed out that consumer trends are shifting towards cheaper food items like hot dogs and beans. So what do you think will happen when Tattooed Chef raises the price on their already more expensive items? And on top of all this, even with all of these changes that they're trying to implement, they still don't expect to reach profitability again until mid 2024. So really, the only real bright side to all of this is that with the stock crash, at least the stock valuation has now fallen all the way down to a price to sales ratio of only 0.5, which is not only really cheap on its own because a PS ratio below 1 is generally considered a good value, but it's also down from over 8 just a year ago. So overall, here's the thing about Tattooed Chef. Here's how I would break all of this down based on my own personal opinion. Now, I think that the future of the plant-based meat alternatives market is actually very bright because I don't think vegetarians and vegans are ever going to go away or stop, having their own preferences when it comes to food. And so if you can market to them the lifestyle of a meat eater, being able to eat hamburgers again, hot dogs again, and not feeling guilty about it because you can still stick to your food preferences and restrictions being a plant-based eater, well, that's a huge market. That there's going to be always going to be demand for that, and especially with rising social movements like climate change and a lot of influence to not eat meat as much. And I don't want to get into the politics or the drama of all of that different stuff. I'm just saying that there is a market for that. And so if you can market to that with plant-based meat alternatives, I think there's a lot of money to be made there. And also within the frozen foods market, like that's also a market that is never going to go away because it adds huge convenience. If you were a plant-based vegetarian or vegan, would you go into your kitchen and make meat alternatives? I mean, I've never tried it myself, but I'd have to imagine that it's not the easiest thing to do. So having the convenience of having pre-packaged foods, and especially frozen ones that you can keep in the freezer for a long time, pop those out whenever you need them, there's huge convenience to that, and I think people will pay for that. If all things were fine, I would say that there's no reason why Tattooed Chef couldn't have a very successful business here. I think plant-based meat alternatives, frozen food, pre-packaged foods, these are all great markets that are never going away. I think there's a lot of money to be made there. There's no reason why they shouldn't be successful long term. The issue is just right now. The issue is that right now, the macro environment is not welcoming to their specific business because plant-based meat alternatives tend to command a premium price tag. And when you're weighing down on consumers with record high inflation and rising interest rates, they just may not opt for that. So it's not the best time for Tattooed Chef to be operating right now. But if they can survive it, I think there is a recovery to be had over the long term. So I can definitely understand why people are interested in the stock right now, why they want to pick it up on the crash because of the potential of a future long-term recovery. I totally get all of that. I just think that there's safer options out there right now, and I think so many stocks have crashed that I think there's better deals out there for much better companies and better stocks. And I personally own way too many spec stocks as it is. Like, I own SoFi, I own Upstart. I mean, I've got Chinese stocks. I've got a lot of high risk stocks in my portfolio. And in this type of environment, I'm not really looking for a lot more risk. I'm kind of trying to get some better value here. So with Tattooed Chef, it's kind of a toss-up, guys. Honestly, it's a bit of a toss-up. It's hard to call it either way. I think it's going to remain super volatile in the short to medium term. Long term, I personally feel that they will recover. It's my own guess. You know, I could be wrong, and they could potentially go bankrupt. I don't think that'll happen though, but it is always a possibility. Either way, though, I just think the stock will remain volatile, and then I see a long-term recovery happening in the future, but who knows when that is. I think the economy really needs to improve for them, for their type of business to perform better. So if I was already owning the stock and shoot, the stock crashed by this much, I mean, I'd probably just be holding it because I'd be like, it already crashed by so much. I'll just hold it into the long term and wait for that recovery. But being that I'm not already in the stock and being that I already own a lot of risk, it's not really a stock that I'm looking to pick up. So I'm not going to be buying it. But anyway, those are my thoughts. So you want to know my thoughts? That's how I feel about this one. I hope you guys enjoyed the video. Thank you so much for stopping by. And let me know down there, are there any other stocks that you would like to see in a future episode? Thanks again. Hope you're all doing well. I'll catch you in the next one. Take care. Bye-bye.